So, right now I'm going to show you one of the simplest and most consistent trading strategies you can start using today. And no experience and no any fancy indicators. When I first figured this out, I was like, damn, why didn't I learn this earlier? If someone showed me this 7 years ago when I was just starting, I would have been having days like this, and this way sooner. Today I'll break it down step by step and we will test it on a real market example so we can actually see how it performs. And here's the key. This one simple approach helps you to avoid two major mistakes that cause like 90% of traders to keep losing money. Honestly, this could save you years of time and thousands of dollars you'd otherwise lose trying to find something as consistent as this. You might be thinking, why does it take most people so damn long to become profitable? And it's not because they don't try. I know that for sure because I spent 4 years grinding, sitting in front of the screen 10 hours a day before I became consistent profitable. And honestly, I could have and I should have figured it out in my first year. The real problem is this. For years, they don't see two key mistakes right in front of them, and they keep going in the wrong direction. But you are the lucky one. I'm going to save you from that. Mistake number one, overcomplicating everything with the indicators. The thing is, most traders stack dozens of indicators, use complex models, layer system on top of another system trying to become more profitable. And in the end, their trading view looks like a Christmas tree and they still can't make a simple decision, enter or not. That creates stress, you start making mistakes and then you blame yourself for missing good setups. I'm sure you felt that FOMO at least a few times, you know exactly what I'm talking about. And I'm willing to bet the more complex your system is, the less actual trading decisions you'll make that grow your account. So we need to strip everything down, get rid of the noise and use a simple, effective approach where it's clear when and where to enter. And that's exactly what this strategy does. Mistake number two. Most traders don't trade to make money. They trade not to lose. Sounds similar, but it's completely different. The gap is really huge. Actually, in my first couple of years, I blew so many accounts that every time I sat down in front of the chart, I could literally feel it, jaw tight, shallow breathing. I was scared to repeat the same mistakes and lose again. And after a while, I just realized that fear isn't about money. It's about trust and confidence. I stopped trusting myself, my decisions, my analysis. It's that feeling when you start doubting every move because of the past losses. You have to push yourself just to click the button. And here's the irony of trading. The harder you try not to lose, the faster you lose. You skip good entries, you close early because you can't handle the pressure, and you're trying to make it back. And no, I'm not your kind of mindset coach here. You just need to understand what's actually holding you back. Then pick a clear system that keeps you out of these emotional traps, and that's when you finally start seeing consistent result. When you have a system, you just follow it. No doubt, no stress, just rules. You're not guessing, you are executing. And that's exactly what this first candle strategy gives you. Confidence. Today you will learn the full setup and then we'll go through real examples so you can see it in numbers that it actually works. Results like this. So, the first candle rule. The goal of this strategy is simple. Get in, take profit, get out. All within about like 90 minutes maximum. Instead of sitting in front of the screen half of the day and taking trades with a higher risk, you just focus, follow the plan and learn how to make money consistently in under 2 hours a day. The good thing is it works across any market. Crypto, forex, stocks, commodities, same principle everywhere. 3 steps, let's go. To start, you need to be at your screen when the session opens. Open TradingView and switch to the 15-minute time frame. Each candle represents 15 minutes of price movement. In crypto, the market runs 24/7, so we use the New York opens as your reference, 9:30 EST. Why? Because the first 15 minutes after that open usually have more volume than any other 15-minute period of the day. And I'll show you why that matters. Step 1. Mark your key levels. The zones where you will look for entries. Wait for the first 15-minute candle to close at 9:45. Once it closes, marks as a high and low. On the left panel in TradingView, grab the trendline tool and draw two lines, one at the high and one the low of that first candle. That's it. These are the only two levels you need. I told you it's simple. But levels alone are useless if you don't know which direction to trade. So to confirm direction, switch to the 5-minute time frame. Each candle is 5 minutes. Now wait for a break of your market levels, either up or down, but when I say break, I don't mean just a candle closing above the level or a wick poking through. We need a specific structure to confirm it, otherwise you'll just catch a fake moves. A lot of traders see something like this and think, breakout, I'm in. No, a wick or even a close above the level isn't enough. We need a fair value gap, FFG. Quick breakdown. An FFG forms when an impulsive move is so strong that it leaves a gap between the wick of the previous candle and the wick of the next one. That unfilled area, this zone right here, is your FFG. This gives you a big edge in the win rate, and you will see it in the examples. So if we break the high of the first candle with an FFG, that's a confirmed bullish direction. But confirmation alone isn't enough. We still need a clean entry. And this is why I like this strategy. It's mechanical, no decisions, no emotions. That's exactly why you can get to consistency much faster. Once FFG forms on the break of the 15-minute level, you place a limit order inside the FFG zone. So if price comes back into that area, you will automatically in the trade. Stop loss goes below the low of the first candle in the FFG pattern. Remember, an FFG is the 3-candle structure, and one of those candles should close inside this 15-minute range. Take profit is set at 2-to-1 risk to reward. Golden rule, your potential profit should be at least twice of your risk. You risk $500 to make $1,000. After that, you just wait. Don't touch the trade, don't move your stop loss, let the market do its job. Now, let me show you a real example. We open BTC on the 15-minute time frame, New York open, 9:30, we wait for the first candle. At 9:45, the candle closes, we mark the high and the low. Then we switch to the 5-minute chart. Price starts pushing up, breaks the high of the first candle, and now we check, do we have an FFG? In this case, we do. There is an impulsive move that leaves a gap between the wicks. Direction is long, we place a limit orders inside this FFG zone, stop goes below the first candle of the pattern. Take profit is set at 2-to-1, as I told before. Price pulls back into the FFG, order gets filled, we are in the trade. From here, we don't touch anything. No moving stop loss, no early exits, just let it play out. The trade closes in less than 2 hours. Profit taken on a single contract, not bad. If one trade a day isn't enough for you and you want more action, like 2, maybe even 5 setups a day from pro traders with a clear entry logic, market analysis, and key news breakdowns, check out our team's channel. Right now it's free. The best way to learn is to watch how professionals actually work. You will see real results and analysis inside. Link is in description. Alright, one trade doesn't prove the strategy, and you are probably thinking, come on, it can't be that simple. So let's look at the backtest data. Another example of how this strategy plays out in a real time. As usual, we mark the high and the low on the 15-minute time frame. First candle, here we go, yep. Now, like always, we move to the 5-minute time frame. That's where we are waiting for our structure to appear. And yep, now we just have to wait and let's see how long it's going to take for our structure to appear. As always, no rush. We just have to wait for our structure and for our entry zone. Yep, here we go. We've got our fair value gap. The first candle is inside of this range, right here. Second candle with an impulsive breakout, and the third one in the same direction. We mark the range between the first and the third candle, and now we simply wait for the price to come back into this area. And in this case, we immediately came back to this area. Our limit order, which we placed in advance, get triggered. So short position is opened. Let me correct the range. Yeah. So short position is opened. Like always, stop loss in this case goes behind the first candle, and the take profit is equal to 2 stop losses. Like always, nothing new, like always, just mechanical actions. Short position is opened, and now we're just waiting for our trade to play out. At this point, we just wait, no emotions, no interference. Like in this case, as you can see, if you would trade on emotions, you would move your stop loss or you would close the position earlier. And no, in this case, we're just waiting. And yep, here we go. We hit our take profit. Here's the result. This strategy proves itself over a long period of time. Not every trade will be profitable, but even if you have more losing trades than winning ones, you can still stay in solid profit overall, because we always work with a risk reward 1 to 2. So like even with a 40% of the or even with a 40% winning rate, you will stay profitable. Now let me show you the backtest results for the 30 days and 180 days, so you can understand what kind of result this strategy can make. If you just follow simple rules and risk, for example, 5% per trade without even using compounding, so over the 30 days, around 33% net profit on your account balance. In case of over 180 days, more than 70% of profit on your account. Again, that's the result without compounding. If your account balance is like $10,000 and your risk is $500 per trade, and this is the kind of result you are looking at. And the most important part, this strategy works like a system. You don't have to do anything. You only need to spend about like 15-20 minutes a day, no stress, no overthinking, just execution. So yeah, that's how this strategy actually works. If you made it this far, actually you've got everything you need to start making money in a consistent way. You understand the 2 mistakes that keep most traders stuck for years, and you've got a simple strategy that's proven on a real data. Now it's on you. I hope you've got enough focus to actually test this for at least a week and see how it performs. I've been trading for 7 years, and I can tell you, the best advice I could give my younger self is to follow experienced traders and stick to the simple strategies. If it sounds interesting, you'll find the link below. See you in the channel.